Over the next 7 years, the health insurance market in Singapore is set to quadruple due to higher levels of disposable income. One of the key players in the region is QBE Insurance Group. Its CEO, Chee Keng Koon, is with me now. Mr. Chee, how has the insurance market developed over the last few years?
Well, Singapore is actually a very interesting market for insurance. As you know, Singapore is a financial hub. We are also the insurance hub in Asia. And if we look back at the statistics of Singapore in terms of revenues, in 2004, the revenue in Singapore is only about 2.2 billion written premium sized for general, above in terms of onshore and offshore. In last year, the figures came out to be about 10.4 billion Sing dollar, which 3.4 is on onshore, basically domestic business, and the balance is offshore business. So actually the growth is fantastic. Over the last 8 years, the growth is about 15% on annual basis. So we have a plan in place to ensure that we will not miss out these opportunities in terms of the growth in Singapore.
What opportunities are there for QBE in the Singapore insurance market?
Looking at Singapore market, Singapore is going through what we call this infrastructure renewal process, which therefore gives rise to opportunity for us. Singapore government are looking at the health insurance. As you know, Asians are becoming more affluent, and as a result, people are more focused on health now. Health is a big market, and people in Asia are actually running into Singapore for treatments and all that, and therefore it gives rise to opportunity in terms of health, in terms of commercials and marine. As you know, Singapore is one of the marine hub in Asia, so we are the leading players in marine over the last 12 years, and we had been the leaders in this aspect, not just in Singapore itself, but also in Asia. And our growth basically focused on the specialty lines. Basically, it's marine in Asia, the liability and casualties, and particularly on the professional indemnity, where we are big players for insuring the doctors, the lawyers, the architects, which has great demand going forward.
Are there any specific challenges you face in Singapore?
The challenges as far as Singapore context is concerned, is always the resource part, the human capital management. I think the influx of the new entrants into the Singapore markets give rise to competitions, not just in terms of people trying to take over your business, but very much so on the competitor trying to take away your resource. When you lose a good resource, the key personnel is equal to actually losing business. So it's a real challenge for me to retain talents. It is these talents and the key personnel are the one that bring us the profits, bring us the growth. Skill will give us the cost leaderships besides being a leader. So what we look at in order to overcome the challenges are cultivating the right attitudes of our people, building extremely good relationships. And in Asia, business depends a lot, not just on pricing itself, but on relationships, long-term relationships, win-win partnerships, collaborations. That's the way to grow.
And what are the challenges and opportunities in the rest of the region?
Asia has been a major market, and that was the saying of many. So to me, there are greenfields in Burma, which is greenfield. But Singapore, Hong Kong, Malaysia, and Indonesia are the markets we like to focus on.
So what are QBE's plans for the next few years?
Our vision is to be the top 3 insurance company in Singapore, and also the top insurance company in Asia. Our plans is to focus on organic growth in Asia, looking at the specialty lines like the marine, the constructions, the bigger regional space, but basically on the casualties and the property markets. And I think we have built a team now. We have built the right capabilities. The key is that we want to build long-term, rewarding relationships with the customers to achieve the target plans, to deliver the results for our people, for our customers, for our shareholders.
Chee Keng Koon, thank you.
Thank you.